The previous candle tells you whether the next candle is going to go up or going to go down. There are two types of candles. We have a continuation or we have a reversal. After watching this video today, you will know the difference between the two and you will be able to predict the very next candle. If the next candle is tradable, you can predict it and take trades inside of that one candle. The previous candle tells you whether that candle is predictable. Now, this allows you to pass prop firm challenges just using this one technique. After this video today, you will not need anything else for daily bias. Let's not waste any time and get straight into this video. Now, the difference is between a continuation and a reversal is the previous candle. What do I mean by that? Well, you can see here that this is a reversal because here we were trading higher. Now, look what happened. Okay, this candle's high got traded above and then we closed inside the previous candle here. The next candle trades lower. Then, because this candle closed below this candle's low, okay, using the previous candle, we then expect a continuation, which we get on the next day. We get an open, a high, a low, a close. Now, what I just showed you there are the two types of candles. You only have these two types of candles. Now, you can have inside candles as well, which lead to larger ranges, but that is a separate video. I don't need to go into that today. You have these candles. Once partnered with daily bias, a draw in liquidity and a key level, these candles are all you need. Now, what I just outlined is a reversal candle here, reversal the next day trades lower, and a continuation candle where we trade below and close below the previous candle's low in a sell model. That's the key. Don't go looking for this in random periods. We have to be in a sell or a buy model. We close below the previous candle's low, the next candle expands. So using this, you can predict the very next candle, just using one candle's close. Now, why were we set to expand here? We were set to expand here because we traded into a higher time frame premium key level, being the top of this fair value gap. We closed in the top of the fair value gap, the bodies respected it, meaning we wicked above but we closed below, and then we start looking for displacement lower. We displace lower with this candle. This candle wicks below the up close candle before the move higher, meaning we have changed the state in delivery. Now, a lot of people think you need to close below the candle. That's not necessary if your daily bias is of strong conviction. So we've been in a very strong sell model. If we wick below here, with that logic that we've been in a very strong sell model, if we wick below here, that is enough to change in the state of delivery. Now, what do we wait for? We wait for a previous candle's high to be raided, which happens here. This previous candle's high gets raided. With the logic that we traded into a higher time frame premium key level, we change the state in delivery. After this gets raided and we see a rejection, meaning we must close back inside this candle's range from high to low. When we do that, the next candle should expand lower. And look what happens. We expand lower. Now, this is easy to say in hindsight. I understand that. But go into your own charts and study this for yourself. This happens a lot. Now that we're in a sell model, remember all the logic I outlined before. That's what's important. Now that we're in a sell model, we can look for continuation candles. Remember, candle 1, reversal candle. Now we look for continuation candles. Meaning, if we close below this candle, previous candle's low, in a sell model, because price is predetermined to go lower, we can expect the next candle to continue lower. Open, high, low, close. Close is below, right? So what happens? Open, high, low, close. Once again. So we did the exact same thing where this candle's low gets closed below, the next candle expands. Now we did close below this one, but then this candle did not expand lower. Why? Because it's the end of the week and the weekly range is likely capped by Thursday. So you can begin to bring in logic, and that is really what I teach inside of my group, inside of my private Discord. Now, you don't necessarily need to know that. But after that, let's say you took a loss here. So you took a win, a win, a win, a loss. That's a pretty good win rate. That's 75%. Now, you wait for this candle. Let's say you took a loss here. You wait for this candle. We take out previous day high into what? Remember what I said previously. into a key level. This is a key level. Why? Well, first of all, as you all know, it is a fair value gap. Daily fair value gap, high to low. You're all familiar with that. But what also do you see on the other side? Another fair value gap, which overlaps with a fair value gap. What is that? A balanced price range. When we have one single pass through on this side and one single pass through on this side, that is a balanced price range. We expect institutional order flow entry drill. Now, that's a tongue twister. Not a lot of you will know what that is. You don't need to know that. All you need to know is that we have a key level here. Remember, I am making things simple for you. I say you need one candle. When I say that, I'm not exaggerating. You need one candle, a reversal candle or a continuation candle. Now, we wick above. Remember what I said. We close back inside the candle's range. Now what? Continuation. Okay. Is this not enough range to capitalize on a 15-minute time frame? So you may be asking, Loz, after all of this, after we've determined which candle is going to be a reversal candle or a continuation candle, okay, both are tradable. Continuation candles are way easier to trade. Now, this is also a swing high. You may be asking, how do we actually position ourselves within that candle? Well, when you're expecting a continuation candle after seeing a reversal candle, you now trade the open, the high, the low, the close. Let's dive into Friday's candle here and see how we would position ourselves. Now, remember, we must divide the separators here. Let's put the separators on. Now, this is Friday's candle. Midnight New York is a key time that the algorithm refers to. The algorithm references this as an overbought or oversold condition. So if we are above New York midnight opening price, above that price, and we are bearish on the daily candle, bearish on a continuation daily candle, above midnight, we are overbought, meaning not an indicator, not any of that, meaning the algorithm is recognizing this market as an overbought market, meaning we distribute lower. So, opening price, mark it out on midnight New York. Whatever that price is, it doesn't matter. That is there. You have an open, okay, open, high, low, close. That candle is all you need. This is why I've been teaching one candle for ages now. It is so important that I stress this to you. This is all you need to make a living past any funded account you want. So how do we position ourselves within continuation candles? Ideally, you want to position yourself above New York midnight opening price. If you cannot get this, like today, this is a small Judas swing above New York midnight. You wait for the displacement. Look at the displacement here. We displace lower, we rally into what? A key level. Into the key fair value gap here, and we trade below. OT from high to low. OT there, 9:45, a key time, because it's the heart of New York Hill Zone, distribute lower. So when I tell my students in my private Discord not to go below the 15-minute time frame for an entry, this is what I'm referring to, the daily candles range. We're looking for continuation candles. Why? Because they're the exact easiest candle to trade. Forget everything else you've learned. Forget everything you've learned about daily bias. All you're looking for is a drawing liquidity. Number one, drawing liquidity. Number two, okay, order flow. Number three, key level. Must be in a premium if you're bearish, must be in a discount if you're bullish. Number four, these candles I've shown you. Reversal candle followed by a continuation candle. Then you can drop time frame to the 15-minute, and any OT, any fair value gap, any order block is going to hold, because now we are in a distribution phase. Once you're in a distribution phase, any of your fair value gaps, any of your premium arrays, all of that you've been taught will hold. Remember, this all came from the logic of us trading into a premium from high to low, premium, fill in the gap, reject the gap with a candle closure, changing the state of delivery. And now, after all of that logic, we start looking for continuation candles and reversal candles. That is it. That is all you're looking for. Now, this will not work if you're looking for it randomly without context. For example, here, you would be expecting a continuation on this candle. At least pattern traders would. But what's the narrative here? We're in an oversold market. We've rallied into a bullish order block. So this isn't a continuation. You're not looking for lower prices down here because we're not even in a premium. This is not a premium market. This would be a premium market. You're in a discount market. So when you create a swing low down here, you're looking for higher prices. Okay? And then you get a reversal candle. Then you start looking for higher prices. Then you can start looking for continuation candles. Okay? So when we get that, when we get all of those candles together with the logic, looking at this as a pattern, down here is a consolidated market until we reach the higher time frame premium here. So all of this from here down to here, 18 bars, 18 candles, I would ignore. Do nothing. Sit on your hands. Walk away from the charts if you have to. Once we hit the higher time frame key level and get away from it, that's the key. We have to run away from that. Now you start looking for reversal candles. Notice how every reversal candle from this point onwards and continuation candle from this point onwards begins to hold. Do you notice that? Now, there was one down here that didn't work, but then we go straight back to what? Looking for a reversal candle there, and then a continuation candle. So 1, 2, 3, 4. Okay, 4 winners there, 1 loss, 5. Okay, 5 out of 6 there, all worked out. So all you are looking for is one candle to confirm whether the next one is going higher or going lower. You must be in a sell model for this to happen and reverse everything I'm saying for a buy model. The logic is the same though, and the logic is the key here. That's what everyone misses. Now I could go on to Euro USD and show you the exact same thing. It wouldn't be any different. Reversal candle, trades higher, trades higher. It's the exact same thing on any pair. What I've created here is logic and narrative built into candle closures as well. This gives you everything you'll ever need. Okay. With that being said, I will leave you guys with that. I'll let you dive into your own charts and backtest this, collect data on this. That's what's important. With that being said, I'll leave it there for you to go into your own charts and study. If you did enjoy this video, please do drop a like and let me help more ICT traders or traders in general. Every like I get on this video, it helps boost the video and doesn't cost anything. So please do drop a like. Comment with any feedback or comment letting me know you did enjoy the video, please. I do respond to all comments. Now, in the top link in my description, you will see a link to my private mentorship where I teach all of this and more in detail. I also post weekly and daily outlooks of what pairs I'm looking at, so you can learn and earn with me. If you want to become my student, now is the time. Top link in my description. Check it out over there. And hopefully I see some of you inside of there. I do have a free Discord as well where I'm a bit less active, well, way less active, but I do post weekly outlooks in there sometimes as well. So do join that. I have a Telegram also. With that being said, I thank you as always for watching, and I'll speak to you guys in the next one.